Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, August 5, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Plenty to talk about. The market is in meltdown mode. What's the story? Let's take it from the top. First, let's go back to last Thursday so I could wipe this line off the board, but 554.80, that's a long time ago already in points. The high of day was 554.87. That was a short for Inside the Number members, live room members, just to reiterate, by the way. On Friday, they gapped down below our trend line. They came in for a test. They bounced off the trend line. They gapped below it and found support in the area that we discussed last week, between 533.07 and 527.40. That was an area where you would at least get, from an intraday perspective, some support. 100 period moving average was in there, caught the tape on Friday. She bounced it a little bit and then had the overnight opening Sunday night into Monday morning debacle / pull the rug out, take them behind the woodshed, shoot them 3 times type of tape. Now let's kind of get the picture of where are we now. Interesting information. All of a sudden appears a trend line that was on the chart a long time ago. They broke out above it. We had a new trend line. But as it stands, that trend line is still important. Where does that come from? We were on this intraday today from an Inside the Number and live room perspective. We knew about the trend line. We were watching the trend line. And if you take it down to a short-term chart, we were aware that above the trend line, she was bullish. And below, we had other stuff going on, which we had the numbers. You'll see them in a moment. The trend line was a good place to know about today. Where does it come from? Well, you go back to the monthly chart, and it's this trend line here that goes from the top of March of 2000, and it goes through the same area of the high from 2022, and you come out with the lower trend line that you see here from today. Pretty interesting information. The market knows about both trend lines. I don't care what anybody says. We watch them in real time. We watch the market act and react around the trend line. Does anybody think it's an accident or coincidence that she came back to the trend line this afternoon, went back and forth around the trend line, and right at the end of the day, the last few minutes of the day, rallies back to close above the trend line after being below on candle closes all this time into the end of the day for the last hour or so of trading? Interesting information. If for nothing else, it confirms the trend line is a thing. A thing is a technical term. Write that down. Put it on a 3M sticky note. All right, back to the daily chart. What do we got? We're around the trend line. We know above the trend line, she'll try and run a rescue operation. Below the trend line, there's some unfinished business to be had. What is the next piece of unfinished business? Well, you have a window to the world. You have a low here at 508.56. The low today was 510.27. So you have this low here, window to the world. If I blow this up a little bit, you can see that there's a lot of space, not a lot on this chart, but there's space down here to about 505 where there's a gap. That would be the next area of interest if they're doing the same thing again tomorrow, quote unquote, killing the tape. If they're below that, you have the big fat round number of 500. Where's 500? Well, let's just find it on the map so that we can identify where 500 is. So we just demark 500 and you say, where's 500? It's a big fat round number. We know the market's going to act / react / find a bull-bear battle, if nothing else from an intraday perspective, around 500. A little bit above, a little bit below. Unless she significantly gaps way below it, that's a what we call in the trading parlance big time number. Now, we don't need this stuff up here anymore. We'll just clean up the chart a little bit and we'll say, look, Could this be, because I know the questions out there, I know what the media is telling you, I know what the blogosphere is telling you, I know what the videos on YouTube are telling you, all that stuff, they're all telling you it's a crash, it's going to collapse, this is the Kamala crash, all that stuff. That may be true. But being in the camp of, I've seen this before, this is not out of the ordinary. If you've been trading for less than a few years, it probably is out of the ordinary. If you've been around for a while, like I have, and many traders that listen to these videos, that participate in the live room, many traders have been around a long time, and this is nothing. This is a down day. This is designed to scare away as many weak hands as possible. Now, recently, last week, the week before, we talked about looking for some kind of a low to develop around the first week or so of August. Could have came before the first week of August, could come this week, but we're looking for a low. How does these things work? Are they going to send you a postcard, a memo when there's a low? Probably not. They bought them right up out of the gate this morning. Does that mean that's a low? No, it doesn't mean that. Will there be a retest? There's a likely retest of some sort coming. What does that mean? Either test the low, make a new low, come up short, rally back. That's all classified as testing the low. That is a likely scenario how this works. Maybe not tomorrow. Maybe they trade away for a couple of days, come back and test the low. But nevertheless, we're looking for a low. We're looking for a bottoming process. Not necessarily for new highs just yet. We're looking for a bounce. That's what we're looking for starters. In the live room today, we talked about a schematic, what I'm looking for over the next few months or so, give or take. But for the purposes here, we're looking for a low. We're looking for a bounce, whether it started today or it starts on Wednesday or Thursday or tomorrow, turn around Tuesday. Either way, as negative as the media was on Friday and today, they will turn on a dime when you get a positive day or two. That was the low. It was a buying opportunity. They parade on all the fund managers that told you that they were buying over the last few days. Why didn't they tell you in advance? They tell you after the fact, which means they're lying about it. Let's look at this objectively while we still have this to look at objectively. Let's get rid of the extended line. Market runs up, and then it pulls back. Market runs up and it pulls back, right? Here, this is a weekly chart. So here, the pullback was about 3 weeks. Here, it was a lot longer. Market runs up of recent, okay, and she pulls back. This is week number 4. Can she still make a higher low and start up again? And the answer is, why not? Is there a rule that says she has to break this low? Now, keep in mind that when this market rolled over here, this was the April rollover, if you will, March into April, the market was rescued at the 20-period moving average, and she had a really, really great rally higher. There were buyers in here. This was a rescue operation. Are they going to give this area up as if it wasn't even there, or are they going to fight it and at least make an attempt, a valiant attempt, to put in a higher low? And that's my contention. They will make an attempt to put in a higher low, if nothing else. Big fat round number 500. Market's down a lot. A lot of bears out there. The sentiment shifted way to the bearish side. A lot of puts being bought. A lot of puts being bought today. A lot of pies in the face. They're buying them at the open. They get a pie in the face. Then they get whipped around during the day. All this stuff is what we don't do in the live trading room. Not going to have that happen on my watch. We're not going to be the victim of Captain Whipsaw. I really want you to pause the video, read the notes, go back to the chart, and double check the work. I'm going to highlight a few important things. What you have to know is what was written today was erring on the side of caution. I'm here to, on days like today, not only provide traders the best analysis I can, but also protect traders that may not be aware that so many points could be gobbled up by Mrs. Market in either direction that they could absolutely wipe out a trade or an account in 15 or 20 minutes if they're not careful. That's why a day like today for a lot of traders becomes a spectator sport. You don't have to trade it. Once the day got started, the volatility was good. It was heavy, but it wasn't really out of whack considering the amount of points that they went down. It was volatile. The amount of price expansion was large, but the market traded pretty much on cue for what they're designed to do. And you'll see that when we go to the intraday numbers. We've got our eye on the trend line. 518, give or take, is where it currently resides. Back to the original trend line they broke out from in May. See what we're talking about that at 0:30 this morning. Was on that early. Have some numbers here below the trend line. There'll be more as you see the notes will populate once we get closer to the opening bell. No need to bring them out early. Don't need them published on the internet this early today. Go ahead and pause the video, read all the notes, see what I'm telling my traders on a day like today. Speaking of which, help a brother out. My traders, folks inside the numbers, folks in the live room, if you would please, how did it go today? Did we have a handle on the market, number one? Did you make any money, number two? Were you kept on the safe side, number three? And did you learn a whole lot of stuff about how this thing works and unfolds during the morning session today? Let's give some other traders out there that don't have the benefit of hearing this stuff during the trading day, let's let them know what's going on. Is this a place of value? Help a brother out. I'm not the brother. All the other traders out there looking for help are the brothers. Let's see what we have as the morning starts to unfold. The meltdown accelerates. Let's be perfectly clear. So I'm telling you this at 8:30. I'm not going to pretend to know which number they'll bounce at and which ones they'll blow right on through. They've blown through tons already, and this is referencing the pre-market. Just to get them on the board, we've got 511.30, 508.25, and 505. Right of the vertical is today's activity. Our first number on the board is 511.30. We didn't need the ones below that. That was, in fact, right around, within reason, low of day. So we got that one at around 8:30. And again, I'm here to say I didn't know that they were going to bounce it on that number. What I did know was where the numbers are, but which one they were going to bounce the tape at. And there would be one. There always is one, at least. Which one was a question mark. Here at 8:55, what I'm saying is you got to let them go for a little while. Let's see what's what. Don't expect some stuff posted on the board right away. And then here we go. I'm starting to get a feel for what's going on. 909, point of reference. The numbers are working. But, for example, in the pre-market, they hit, now watch this, 508.25. And this is to my point from before. And this is what the traders in the live room and inside the numbers need to understand about how you can, if you're willing to trade days like today. What the expectations are. In the pre-market, they hit 508.25 and spiked it by a few cents. They bounced all the way back to 515.15. That's like 70 S&P handles, give or take. If you're on the right side, fantastic. If you're on the wrong side, you're in trouble. That's why you have to be aware. Position sizes have to change. Even the vehicles you use may change. That was just a case in point for today. Now, 921. Sound crazy, but the numbers are wide. So I was willing to buy them up down there at 508.25 to 505, but they never got down there in the regular session. They were down there in the pre-market. That's okay. Now you have to look at this. We're not looking for 5 or 10 points today. We're looking for like 30 to 50 on a trade because of the volume, volatility, and range expansion. We don't need the lower stuff down here. 936, 511.30 is important. Below, the door opens for lower stuff. They never did that other than a spike. Staying above keeps the door open for 515.15. Okay, and then around 518, 515.15. So stay above 511.30. We're looking for 515.15. That's a ton of points. Got them. And then the trend line was right around 518 today, which means this one is off that I just put on there while we were doing this video. The other one from my other chart was around 518 today. Forgive me for that. But you could see here the high in this candle was 518.04. In fact, the trend line was up here at the time. The traders in the live room could attest to that. The 518 was an exit, and what you'll find out in a minute, it was also an opportunity for a short if a trader was willing and able to take a short today. Let's go see that. there's your 518. That's where the trend line was. Forgive me for putting it in the wrong place tonight. Overhead resistance is 518, give or take, up to 520.15. Above 520.15, no dice. 518, give or take, up to, this is 520, I wrote 510, it's a typo, it's a fat finger. Should be overhead resistance. If you're taking a trade, just be careful. 518.04 high against 518, give or take, and the pullback. And you can see the pullback here. They came back to 515, 30 S&P handles, give or take. You see what I was saying? We're looking for chunks. Just don't let the remainder go bad. When they went back up, that was it. It was a one and done. First time, best time. 10 o'clock, the trade is over on the short side. First time, best time. Now 520.15 is overhead resistance, but not the same from a trading perspective. Well, they reacted there anyway. 520 is up here. They reacted anyway, but still, it's up here. And the point here is that even though the numbers were wide, the span was wide, the range was wide, all that stuff, the numbers still worked. You could see right there, your 520.15, that was overhead resistance, but the first time, best time for a trade on the short side with a market that could squeeze at any time. You have to be careful when the market's down this much on a day like today. You look at a daily chart, it's down this much. Forget about all this stuff. Let's get rid of it so you could see. Down this much, they could squeeze it up at any time. You don't know whether they will or they won't. But when the market's down this much, it's called shorting in the hole. It's very difficult to short the market. You have to be precise. You have to have a good spot. And you have to know, repeat, you have to know where it's wrong. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Everything that you need to be successful trading the S&P during the trading day. Futures, options on futures, exchange traded products, doesn't matter. It's all the same. They're all directional trades. Stocks on the move. Let's take a look at Microsoft today. We'll look at Amazon. We'll look at Apple. Tesla, Nvidia, and Google didn't get to their numbers. Came close. Could look at the charts anyway, but we'll analyze the three that did. Here's Google. They came up just short. 154.53 was my number. And the low of day was, where is it? 154.93. So they didn't hit the entry objective, but the numbers worked. They came close. It's undisputed that that was in support area today. Nvidia wasn't that close and Tesla wasn't that close. So we'll move on to the other ones. Let's take a look at Microsoft. There's a 15-minute intraday chart of Microsoft, 387.75, spiked it, ripped it back up in the other direction. In no time, where are they? Look at the amount of points we're talking about. They're over $400. They're up $13. And yes, we had participation inside the numbers, live room, the whole kit and caboodle. How about Amazon? First number was 154.55. That wasn't the second number. The second number was lower, opened just below this number and ripped it back up in the other direction. We did have traders participate, but painting by the numbers, this was officially a no trade. They opened slightly below the number. That's a screw job, and then they ripped it back up. The numbers work. That's the point. How about Apple? 196.90, spiked it by a few pennies, ripped it back up in the other direction. A lot of participation in Apple in the live room today, inside the numbers. Traders like Apple. How do you like dem apples? It was also a bonanza for the lazy swing trader Automagical algo system today. And yes, we had some trades that stopped out at the end of the day today. We lost some stocks we were holding, down 4, 5, 6% type stuff. I keep the stops rather tight. But we also caught a profit on a short, and we got a bunch of new entries that are already well into the money. She bought Dollar Tree, DLTR, 95.52. She bought First Solar, 197.59. Look at that rip. Up 5%, same day. She bought Amazon at 151.71. Look at that rip. Pretty much low of day. She bought Take-Two Interactive, 137.60. Nice rip. The numbers work. Day trade, swing trade, same process, different numbers. She bought UAL, 37.03. These are numbers that are predetermined, meaning they're already built in. They're on a watch list. The alerts are going to go out when they hit. These numbers are not created today. The system is waiting on these numbers. That's the point. There's nothing random about the market. You can take that to the bank. Can't buy WM, crushed, of course, down 3% like everything else, give or take, into the 200 period moving average. How quickly they fell. It's unbelievable what happened in 4 days. Last week, on Wednesday, they made a new high. That is pretty remarkable when you think about it. 200 week moving average, just like that, in one fell swoop. We're going to see what happens over the next couple of days. Looking for a low across the board. All the things should participate. It's not just a low in the S&P. It'll populate across the board. Just don't know if it's going to be today, tomorrow, the next day. We're looking for a low. We should get a low. Remember this with Team Transports? This whole thing with the triangle. We've been talking about this for weeks and weeks and weeks, if not more. When they get to the end of the apex, time is up. Right now, all they did was spike the top down to the bottom. Think about it. Peel away the media, peel away the emotions, peel away the human side of what you think about the market and what's going on around the world, the Iran-Israel issue that's going on, the uncertainty around the U.S. president election coming up, all that stuff. And when you strip away all the rhetoric, all they did was spike a trend line and come back into an area that they've been contained in for months and months and months. In fact, years. It's interesting to me. The Q people came up short of the 50-week moving average. You go over to the daily chart and they spiked through, opened below the 200 period, an immediate rescue operation. We'll see if that holds. Again, we'll use the moving averages as guides. One day, I'm not going to say the trend is your friend, all that stuff. We don't really know yet. We need more time. Are we going to have a low, another 150, 200 points on the S&P lower? Or are we going to have a low somewhere where we are right now? Let's reserve further assessment until we see the low come in. At this point, you're looking at this area down here as the next major area of support for the Qs. Those lows. Give or take. Will they spike that low? Is this a test of those lows? Will they have to come lower to spike today's low, come closer to these lows, or spike these lows and reverse back up? Are they going to put in a higher low? All that stuff is an open question right now. These are the things that I'm looking at, I'm thinking about. By the way, the volume today across the board was very, very good. Is it a new leg down or a final low, at least on this leg down? We'll see. Nothing spared, not even the financials, down 3% today. Just like that, they give up all the moving averages in 2 days. Not all, but almost all the moving averages. And guess what? The trend is your friend, but the trend on the daily chart isn't so northbound at the point. Now, they've just given up today the weekly 20-period moving average. It's going to be important where the week closes as it relates to the 20-period moving average. Don't you think? Long week ahead, we'll see where the financials go. We'll see if we get a bounce in the market or we have a whole nother leg down. That'll be a telltale sign. The financials. Smash Mouth, same routine as everybody else. At least in this case, came up short of the 50-period moving average on the weekly chart. Had a rescue operation. Actually filled a gap today, which is interesting. A little bit of relative strength intraday. And one other thing that's interesting was Friday's volume was higher than today. Now, I'm not sure exactly what that means right now, but it stands out to me like a sore thumb when I look at the volumes of the Spider. Tremendous volume today compared to last week. IWM, not so much. Interesting information. You have decreasing volume. It's heavy volume for these 3 days, even 4 days, but decreasing nonetheless. Interesting information. Qs, big spike in volume. XLF, big spike in volume. Smash Mouth, not so much. Big volume over the last 4 days, but not today as compared to Friday. Not sure exactly what that means yet, but it's going to mean something. The market's always trying to make a hint about something. The question is, can we pick up the hints? When something stands out to me, it's something on my radar screen. I write it down. I want to watch it. I want to see what happens. Is something a canary? Are they trying to tell us something? Do they have to have capitulation volume across the board in order to make a low? It goes both ways. I'm watching. I'm analyzing. I'm thinking. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost. my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.